everybody, ang ating topic for today is going to be on notes payable, particularly on the amortization of the discount on notes payable and debt restructuring, gain or loss on debt restructuring. So this is a problem solving session, so we will be going immediately to the problem proper solving and accounting. So we have 3 problems here, so let's start with problem 6-1. Problem reads, on January 1st, 2020, Aklan Company acquired machine from Antique Company in lieu of cash payment. Aklan gave Antique a 3-year 600,000 3% notes payable. Principal is due annually every 31st of December. Prevailing rate of interest of this type of note is 10%. So to explain, this is a notes payable this is an installment payment on the part of Aklan Aklan Company. We will be accounting for the annual payment of Aklan Company. Basing on the information, 3% ang notes payable at ang prevailing interest rate ay 10%. So, ang requirement ay amortization table of the notes payable and the journal entries for the 6-1 problem. And we will be heading to the solution proper for this type of transaction. Ang unang-una natin dapat gawin dito ay we really have to get the present value of the note, kasi yon ang basis ng purchase. So the present value of the note is going to be accounted as like this. The 200,000, the annual payment will be recognized on its present value. We will be having a 3 equal payment of 200,000. So the present value of annuity of 1 at 10% for 3 periods will be used. Okay, so 200,000, the present value of annuity for 3 periods is 2.4869. So the product is 497,380. Then we will also account for the interest on the outstanding payable. So the interest on the first period is 18,000. That is 600,000 multiplied by 3%, that is 18,000 multiplied by the present value of 1 in 1 period. That is the first interest payment kasi. So 0.9091, that is 16,364. On the second year, the interest is going to be 12,000, that is 400,000 times 3%, basing on the nominal interest rate, and it's going to be multiplied by the present value of 1 at 10% in 2 periods already. That is the second year, so 2 periods na. So the product is 9917. And lastly, the outstanding balance of the notes payable on the third and last year is 200,000 multiplied by the nominal rate of interest, that is 3%, that is 6,000, and we will be multiplying it to the present value of 1 10% for the third period, that is 3 periods already. So 0.7513, that is 4508. Okay, we will sum it up. The total is 528168. That represents the present value of the notes payable as of January 1st, 2020. So the amortization table goes like this. No? The carrying value as of January 1st, that is the balance as of January 1st, 528168. On December 31st, 2020, the amortization goes like this. 528 multiplied by 10%, that is 52817. Okay. And the payment will be reflected in the amortization table, that is 200,000 and 18,000. So to amortize, that is the difference between the 52,817 and 18,000, that is 34,817. So the balance goes like this: 528,000, 168, no, for that matter, and minus 200,000, and you're going to add the 34,817, that is 362,985. Okay. So the carrying value as of December 31st, 2020 is 362,985. Again, 528,168 minus 200,000 plus 34,817. That is the difference between 52,817 and 18,000. So that goes for the second year. No? The second year, that is 362,985,000 minus 200,000 plus 24,299. That is 187,284. For the third year, 187,284 minus 200,000 plus 12,728. Any discrepancy is going to be adjusted. That is only due to rounding off issues. Okay, so wala na tayong balance on the third year kasi binayaran na yan in full. So the entries, January 1st, machinery, debit, 528,168. Naka-reflect naman yan sa ating amortization table. Discount on notes payable, that is the difference between 528,168 and the face value of the note, 600,000. So, that's for January 1st, the originating transaction. So, on December 31st, 2020, the adjustment is going to be, that includes the payment of the note of the 200,000, the recognition of expense, 52,817, and the amortization of discount, 34,817, and the cash payment of 218,000. The 218,000 cash payment is the 200,000 principal and the nominal interest of 18,000. For the second year, the same, debit 200,000, interest expense debit, that is 36,299, and the discount amortization 24,299, and lastly the cash payment of 212,000, that is 200,000 plus 12,000. On the third and last year, debit to notes payable 200,000, interest expense of 18,728, as you can see on the third and last period. The discount amortization, 12,728, that is 12,728, and the cash payment of 206,000. So that is for problem 1. That's how we will account for the this type of transaction, notes payable, installment basis, 3 equal payments of 200,000 with nominal interest of 3%, and the prevailing rate of interest is 10%. I hope you appreciate that, and these are the entries once again. Okay, we will go to the problem number 2. On January 1st, 2020, Oriental Company acquired inventory with a list price of 800,000 and a cash price of 497,380 by issuing 3-year 600,000 non-interest-bearing note. For this time, this is a non-interest-bearing notes payable. Principal is due equal payments. At this point, we already know the equal payment is going to be at 200,000 per year, kasi 3 annual payments of coming from the 600,000 outstanding, so 200,000 per year. So it will start from the first year, December 31st, 2020. The effective rate of interest is still 10%. The requirement is amortization table again and the journal entries. Okay, take note that the problem number 2, we have a non-interest bearing notes payable. We will be having a different treatment for this type of notes compared to the previous one, that is an interest bearing note. At this point, this is a non-interest bearing notes payable. So let's go to the solution for 6-2. Again, all you have to do is get the present value of 600,000 at 10% for 3 periods. The same, ang gagawin din natin, present value of annuity of 1 at 10% for 3 periods, that is 200,000 times 2.4869, 497,380 is the product. As you all notice, wala na tayong recognition for interest because there is no nominal interest rate. That is a non-interest bearing note. So we will just stick to the balance of 497,380. That is the present value of the 3 annual payments of 200,000 at 10%. That's the present value of the notes payable is 497,380. So let's go to the amortization table, 497,380. And the first amortization is going to be 497,380. That is the 10% of 497,380. And also we will reflect the payment. Okay, so that is going to be 497,380. Okay, and minus 200,000 plus 49,738. That is 347,118 for the first year. That goes to the second year, 347,118 minus 200,000 plus 34,712 for a total of 181,380. And for the last one, 181,380 minus 200,000 plus 18,170, that is 0. For any discrepancy, that is only due to the rounding off issues. So let's go to the journal entries. On January 1st, the journal entry is going to be debit inventory 497,380. That is the cash price of the inventory. It also agrees to the present value of the carrying value of the notes as of January 1, 497,380, basing on the present value factor of 2.4869. 497,380 is the balance, also with the inventory, which is also given in the problem, 497,380. Okay, the discount on notes payable, debit 102,620. That is the difference between 600 and 497,380. That is 102,620 discount on notes payable. On December 31st, for the first year, the amortization, that is also the payment for the notes payable, debit to notes payable 200,000, credit to cash 200,000, and interest expense, debit for the amortization, and the discount on notes payable 497,380. Okay, so we would like to emphasize that the amortization of the discount tends to increase the carrying value of the note. But since we are paying regularly, this 200,000 is the deduction. So if you will notice, the deduction will be netted, since it's supposed to be deducted by 200,000, and considering the effective interest and the amortization is an increase, so meron siyang net. Okay? Imbis na 200,000 ang mababawas, more or less, less than 200,000 because of the amortization of the discount. Okay? So, that's how it is, considering the discounts of the notes payable. That's how it affects the account of the notes payable. So, for the 2021, ang mga entries natin, also the same payment, 200,000 for the notes payable, credit cash, interest expense 34,712, that is what is reflected on the amortization table for the second year, and credit to discounts notes payable, that goes for the second year. Okay, this is 34,712. Okay, on the third year, that is payment again, for 200,000, and credit to cash 200,000, interest expense 18,170. Okay, that's the amount, and discount on notes payable 18,170. Now, you will notice zero na ang ating ending balance considering the decrease in the principal and the amortization of 18,170. Okay. So, let's go to problem number 3. This is a quite different type of problem kasi dito na yung ating tinatawag na debt restructuring. So, for this problem, I will be giving you a technique on how to account for the debt restructuring of notes payable. Due to extreme financial difficulties, Armada Company had negotiated a restructuring of a 10%, 5 million notes payable due on 31st of December 2020. The unpaid interest on the note on such date is 500,000. Okay, that is based on the 10% nominal interest. The creditor had agreed to reduce the face value to 4 million, forgive the unpaid interest, and reduce the rate to 8%, and extend the due date 3 years from the December 31st, 2020. Required journal entries and the debt restructuring procedures, and related transactions in 2020. So, to explain this problem, this is a restructuring wherein the debtor, is given, a sort of a favorable scheme, so that he can be able to pay the remaining balance of the payable. So, kasama na dito yung ibinaba yung principal, 4 million, from the 5 million, naging 4 million. Yung accrued interest na 500,000 ay forgiven na, hindi na siya sisingilin, at yung interest na rate, na nominal interest rate na 10% ay magiging 8% na lang. And also, yung period, duration of the note is extended, from the December 31st, 2020, no, gagawin na naman o gagawin pa rin na 3 years ang duration ng note, ano, considering natapos na yung uh, isang taon, nag-extend na uli ng isang taon, magiging 3 years uli yung duration ng note. So, yan ang mga restructuring. So, that favors the debtor, no, yung Armada company. So, let's go to the solution of this problem. So, ang unang-una, no, kukunin mo yung present value, no, as always, para makuha natin yung talagang appropriate valuation ng note as of the reporting period. Okay, the present value of the 600,000 at 10% for 3 periods, that is the okay, the 200, sorry, hindi yan pala. Okay, ito pala. Nandito tayo sa third. Alright, sorry for that. Okay. For the debt restructuring, ano, okay, the first step na gagawin mo is you will get the present value of the new, yung new notes payable. So, ang ating new notes payable ay present value valued at 10% for 3 periods, 4 million pesos ang face value noon, no? Valued at 10% for 3 periods. Okay. So, ang ating present value of 1 is 0.751315, that is 3,005,260. And we will also account for the new interest expense. Ang ating bagong interest expense based doon sa ating bagong notes payable ay 320,000. So, paano nakuha yan? That is 8% of 4 million. No? Yun na yung bagong interest rate. 8% times 4 million, that is 320,000 multiplied by the present value of annuity, no, at the old rate again, no. Ang old rate naman natin ay 10%, yung effective rate of interest. Itong 2.48685 ay based sa 10%. So, present value of annuity of 1 at 10% for 3 periods. Kaya 3 periods kasi 3 periods uli ang binigay, ang ginrant ng lender, no? 3 periods uli. Kaya 2.48685, that is based on the 10% present value of annuity of 1, no, for 3 periods. 320,000 times 2.48685, that is 795,792. So, ang present value ng new notes payable ay 3,801,052. At ibangga natin yung face amount ng new notes payable, that is 4 million. Yan ang given ng lender, ano. So, ang discount natin for the new notes payable ay 198,948. So, set aside for that information, the notes payable old is 5 million, no? Alam natin na yun yung carrying amount on that particular date na nagkaroon siya ng restructuring. I-add natin yung accrued interest na 500,000. So, that is the total carrying value of the old notes payable, 5,500,000. Ibangga mo ngayon yung present value ng new notes payable, that is 3,801,052. So, there goes the gain on the debt restructuring. So, to interpret that, that means to say that the given up, no, na old notes is higher than the present value of the new notes payable. That is again on the part of the borrower, rather on the borrower. So, meron siyang gain on the restructuring, ano. So, nakatipid siya, that means to say. So, ang ating amortization table goes like this. The present value of the new notes payable, no, 3,801,052. That is on the time of the restructuring, ano. So, i-ano natin ito, i-amortize natin. So, sorry for this is going to be up to, this is going to be on 1, okay, and the second year or the second period, this is going to be 2, and on the third and last year is going to be on the 2023. So, the first amortization and the payment of interest, ano, 3,801,052. Okay? So, magbabayad siya ng interest, and the recognition of the effective rate of interest, that is 380,105. The difference between the payment of 320, that is the actual payment, and the recognition of effective interest, the difference is 60,105. That's going to be the amortization. Okay, netted. That goes to second year, no, 3861157 times 10%, no. Okay, to be more precise, this 320,000, ano, bakit 320,000 ang payment? This is 400 or 4 million multiplied by 8%. Kaya 320,000 ang kanyang payment per year. Okay? And the difference between the effective interest and the nominal interest is 66,116 for the second year, and it's going to be an addition to the carrying amount. Kaya naging 3.927 million siya kasi this amortization is an addition, no? And at the same time, no, merong effective rate of interest and the payment. So, it is the difference between the nominal and the effective rate of interest. On the third and last year, 3.927723, no? The interest rate is 10%. Once again, doon sa old rate kasi ang gagamitin niya sa effective rate of interest, 392,727, no? Ibangga mo doon sa bagong nominal interest. Ito yung binagong nominal interest from 10 naging 8% sa nominal interest, kaya 320,000. Ang effective rate of interest naman is the same. So, the difference is 72,727. So, since this is an amortization, no, dinagdag natin siya. So, on the third and last periods, nakuha na natin yung face amount ng note. So, that means to say, this is the amount to be paid on the third and last period, 4 million pesos. So, that's how amortization is done, no, for the 3-period extension of the note based on the debt restructuring of the notes payable. So, journal entries doon sa restructuring as of December 31, 2020, no, this is the time na nagkaroon ng restructuring, no. Kinancel yung notes payable na old, 5 million. Yung accrued interest also canceled, that is 500,000. I-credit mo yung bagong face amount ng notes payable. Then, at the same time, since meron siyang carrying amount, no, get the difference between 4 million and the 3,801,052 ito yung discount on note, 198,948. So, balancing figure, katulad ng kinuha natin dito kanina, no? The carrying amount of the old note minus the present value of the new note is 1,698,948. So, ang ating recognition ng interest on the adjustment of the notes is 320,000 for the payment, no, doon sa notes. Actual payment of 320,000 credit cash. Amortization, that is 60,105, okay, for the first year. Credit, that is discount on notes payable. On December, okay, again, change natin yung yung petsa, that is 22 ito, and this one is December. This is 23. Okay. So, for the second year, the same, 320, debit to expense and credit to cash. Interest expense for the amortization, 66,116. Ayan, makikita naman natin dito sa amortization table, and credit to discount on notes payable. On the third, again, payment of 320,000, expense and credit to cash. Then, amortization, 72,727, ayun, for the amortization and credit to discount on notes payable. And on the last entry, that is going to be the payment of the notes payable on its face value, no? Again, pagka nag-matured na at amortized na ang notes payable, no, the carrying amount will be equal to the face value of the note. So, payment na ng notes payable, debit to notes payable, and credit to cash. So, that goes to the notes payable, no, for the debt restructuring, no, the third problem natin. Okay? So, this is the computation and amortization table, and also the journal entries concerning this type of transaction on notes payable. So, these are the solutions for the three problems na ipinresent natin today. So, I hope you got something out of it, and see you again for the next version ng ating accounting in 30 minutes. Share, like, and subscribe lang, and bye for now.